The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have our guest today, Adrienne Togaray, at the break at 9:30. She's going to be doing a webinar for some folks on psychology. So if you got a notice on that, I'd certainly recommend that you take a look at that tomorrow. If you have any questions, just go to www.tradingontarget.com, and that should give you some information on it. She's the master of the psychology stuff, folks. She's very good. Let's take a look here at the Apple chart that we try to look at. We've been following it just to show you the ratios and things. You'll notice that yesterday on the 24th, the market had gapped down and stopped exactly at the 78% level. That reinforces that opening price that we always talk about when we're looking at stocks and also in foreign exchange. The odds of it going higher when you're above the open is better than 7 out of 10. And now what you're looking at, I believe I saw it trading at 222 this morning here in Apple. So watch 223.5 today, because that's going to be a beautiful ABCD pattern. It will also be a Gartley, and it will also be a 61% retracement of the high that we made back on September 13th. We'll review this, of course, tomorrow, just to give you an idea that even though these patterns don't work all the time, they work some of the time, and they do help you to quantify the risk and try to put the odds in your favor. That's the whole secret of doing this, is to keep the risks as small as possible, and you'll be able to control that. You can't control the profit because you never know what that's going to give you, but you can control the risk. Now, we need to look at one market that is really ripe, folks, and it's in the news quite a bit. That is the crude oil market. I wanted to bring this to your attention because we're seeing a big divergence here. You'll notice this is the pattern for the crude oil. This is West Texas Intermediate crude, but the Brent North Sea crude is much, much higher. It's broken above the 78% level, which is at 72.90. In this thing, but where the other one is just it's just gone really, really strong. Oh, it's trading at 219. Oh, it must have sold off because I thought I saw it. You know, I'm pretty sure I saw it. But thank you for letting me know, Gator. Yeah, Apple's down a little bit right now at 219, but we'll watch the 222. We'll see what happens with this, and we'll go from that area. But as we're watching this crude oil, pay attention to it, because we're seeing a divergence between WTI and Brent North Sea. Brent North Sea, of course, is the premium oil, they say. So, but that has broken out to the upside. Our good friend Dennis Gartman focused on that in his newsletter this morning. He was kind enough to send it on from our good friend Rich Anderson that pointed this out to us. So it's going to be interesting to see whether this pattern that we're looking at here in the crude oil is going to give an indication that there's a possible high coming in the oil market. Of course, with the meeting going on in New York at the United Nations building, I'm sure they'll be using the oil as either hammer or a chisel over there, trying to, get on some deals, but we'll have to do that one thing at a time. Now, yesterday we didn't get a chance to review a couple of the charts that we wanted to look at, which were mainly the main chart was the two of them. One was Apple. Let's try that again, Larry. One was Twitter, and the other one, of course, was Facebook. You'll notice Twitter, we had the big breakdown. We had the 38% rally, and in fact, it wasn't even a 38% rally, and it took well over a month to get there. I couldn't get into the gap area, and that suggested an ABCD pattern down around $20 a share. We're trading around 28 right now in Twitter. Whether it gets there or not remains to be seen. But as you look at this chart, from December through all the way through June, it made a big ABCD pattern and completed it a nearly perfect formation there back on June the 4th. Now, the next one we want to take a look at, of course, is the Facebook, and we're getting close here in Facebook. It's not too far away now. We're only about 8 points away. One bad news in Facebook, and you could be there. That would complete that butterfly bottom down there at that one, right around that 157, 158 level. But longer term, you can see you do have that big ABCD pattern with the 382 retracement, and then the D move down to 134. That's what I would be looking for. You'll notice that we had a 3-day rally, and then you saw yesterday how it gave quite a bit of it back. So that's an indication that the market is, relatively weak. And of course, we do have a market that is, but Basil would always say, a bifurcated market, some going up, some going down. But if we take a look here at the E-mini S&P this morning, from what we did yesterday, it was really quite amazing where it stopped. Those of you that follow the Fibonacci numbers, we made the exact 50% retracement from September the 17th, and we made a 38% retracement from September the 7th. It stopped right on there at 29.19. Now, as long as we stay there, it's going to be okay, but we have a 61% retracement at 29.36, and if that stops and it holds, that gives an ABCD structure down to the 29.05 level. So I think they've already been talking about that in the Tiger Den this morning, because the astute technicians that they are, they always share their good information. So we'll keep an eye on that, but that's what it's looking like right now. Now, today is actually the first day of fall was yesterday, so we're into what am I talking about? That was on the 22nd. I'm losing track of time. Sorry, folks. What I was going to say is that thank you, Maria. Anyway, Sarah says hello to you. Anyway, we have a situation where there was a close in the Chinese markets yesterday because of the autumn festival. And those of you that live anywhere near where the full moon is coming up, which is all over the place, just go out and look at it, folks. It is really bright. This is a harvest moon. We get those September, October, and these are really bright ones. And they go all the way through to November. So they're very, very bright. And of course, the hemisphere changes. We're getting into our winter months pretty soon, so that'll be very, very interesting to look at also. Now, the next one I wanted to talk about here is the U.S. dollar index, because we're at a real critical level, folks. And we've been here 3 days now. If we just look at this, you're right at a 382 retracement of the move from February. That's an ABCD, and that's a major ABCD. So this could be very bullish to the dollar, i.e. bearish to the euro. And we're watching now. Yesterday's euro price, we went to 118, and that was a big ABCD. We've been watching at that for some time, and it stopped exactly where it should have. Now, they don't always do that, but when they do, it puts a little bit of more arrows in your quiver, because then you know exactly where you are, and you'll be able to see whether these markets respond or not. So let's take a little break here, and we'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to take a little bit of time here to talk about the Treasury bond market. This has been a market that just keeps dropping and dropping. It's very, very oversold. As you can see here, since the 22nd of August, we've been down for well over a month. We're into the 5th week of that right now. You'll notice that we're trading right around that 139 and change level. There's a very, very big 1.618 number there. If you could look at the chart very closely on the lower right-hand side, that comes in around the 139.08 level. So between 139.08 and 138.08, which is the larger 1.618 expansion and the 1.27 expansion, that's where we would expect to see the market bounce at least a little bit. Now, this move would be very similar to the move that we had during March and April and May. You'll notice that we had a big down move there. We went from 147 down to 140. Then we rallied back to touch those old highs again. This is equivalent to the same type of move we're having now. So this market is extremely oversold and due for a rally. And I believe we had the Federal Reserve getting ready to do something this week, if I'm not mistaken. And I think I got that from Rich Anderson this morning. So yeah, I would double check that because I am not I do not follow the fundamentals. Anyway, just keep an eye on that one. That's going to be really interesting down there at that point. That's the main thing that I would urge you to do. Do the work yourself. As Mr. Twentyman says, defy human nature. Now, I want to get back to the currencies for a little bit because I want you to see this euro on a longer-term basis where we are because it's very similar to that U.S. dollar chart, only it's the reverse. You'll notice that we made that big 61% bottom down there at the 113 level. We rallied straight up, 5 handles to 118 and change. We hit that 118 again yesterday. We broke about 80 pips from that level. Now we're backing off a little bit. This is further indication that what we're looking at here is a really big dogfight going on in the U.S. dollar index led by the euro. So if you're really bearish, you've got a great place to sell it right now against those highs at 118. And if you're bullish, you still got a chance to see if it'll pop through that 118, because it really needs to close above that 118 level to turn this around, because that was spot on a 382 retracement. That's equivalent to that ABCD on the daily chart that we saw with the dollar index, which was a perfect ABCD pattern. That's the kind. I'm going to bring this up because this is what it's all about. See, this is the exact opposite of what we're looking at in the euro. Is at 382 there at 93.29, and we've been there for 3 days, folks. On the dollar index. That means that the euro has been under some resistance, and also the other currencies, you know, the pound and the Australian dollar, the Canadian dollar, all of them have had, you know, pretty nice moves, and they're up against some major resistance at those levels. In fact, you know, one of the favorite commodities, foreign exchange things to trade is the Canadian dollar. If you just want to look at this just on a 15-minute. Now, this is really good for scalping, because these moves that you have, like the sale yesterday at the ABCD pattern up there at that 129.50, it dropped $400, stopped exactly at the 61% retracement, and stayed there for an hour. It stayed at that 129.07 area for an hour before it started to go up, and then it went up and made a new high at 129.65. And if you'll look at that right in the middle of the page, you'll see that was an exact 61% retracement for the high made back on September 19th. So who's ever trading these foreign exchange instruments certainly has some feeling on what happens with the natural order of markets, and that's what the Fibonacci summation sequence tries to do. And it doesn't work all the time, but it works some of the time, and that's the thing that you have to remember. We've had some chatter about the gold and the silver. I still think they're going to go higher. They haven't backed off. We had a $20 break in gold, and we've gotten about half of that back, which is a good sign. The silver didn't break nearly as much and is holding up relatively well. We are over the time of the full moon, so you're expecting to see some greater volatility. But as of yet, that has really not happened. That doesn't mean that it can't happen. It just means as of yet, it hasn't happened. I've been asked to hold on one second here. 1 second. I want to bring up I want to do something here. Yes, I play, folks. Mr. Z just posted a chart here for the Brent North Sea crude. That is, I want you to see that breakout, because we're trading near $82 a barrel there. Now, all we're doing in the crude oil for the West Texas crude, all we're doing in West Texas crude, and this is a 4-hour chart, you can see that it's not even near breaking out. If you'll just take a look at this, you'll see that this is a big diversion. So this is usually something that is quite bearish. So keep that in mind. You know, maybe this is something that you might want to look at, but there should be some pretty strong resistance up there at the 72.70. I think we hit as high as 72.69 so far today. Whether that'll mean much or not, we'll have to wait and see, but we'll keep an eye on it, because this is a huge divergence that we're looking at, and we're seeing it. It's very, very vivid. We're having a question here about the sugar, and I'll be happy to do that for you, Ruby. Just give me a second. It only takes me a minute to get the old sugar, the sweet up, and we'll get it ready to go. We've been very, very, very fortunate in the sugar. What I'm going to be doing is, since we're almost in, I'm going to show you the sugar for March of next year. That's the one that I would be watching, because it is one that is. Hold on one second here. We'll see here out of this. There we go. Yeah, we're almost ready. Just give me a second here, because this is a time, if you want to buy it, this is where you want to be looking at it. So let me put this up here for Ruby, and you'll be able to see it here. Okay, here's March 2019 sugar at the 78% level. We've come down about $1.50. You'll notice that the move, you talk about markets that repeat, folks. Look at this sugar market. In May, from the 23rd of May to the 30th of May, the market rallied well over $1.50, which is about $1,700 in the sugar market. It goes down and makes a bottom on the 20th, and we were on the show talking to you about this when it was $11, and it went from 11 to 12.60. Well, 11 to 12.60 is exactly the same move that we made between May in the month of May. It was exactly the same, and now you've come down and you've made a 78% retracement of that move. So this is a very low risk place to be a buyer of sugar, because if you buy it here, you don't have to risk too much, because the old low's at 1080, so your risk here is about 43 points, which is roughly $500 if you want to get involved in the sugar. If you wanted to be extremely safe, the best thing to do would be to wait one day to make sure that the market, because we had that big down move yesterday with a closing near the bottom of the range, is to watch it very, very, very closely today and possibly by tomorrow. You might have to pay up for it, but that will also negate your risk. I mean, it'll bring your risk down quite a bit. We'll take a break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got our good friend Adrian Togaray from Trading on Target on the line. AT, how are you doing this morning?
I'm well, Larry, and I hope you're the same.
I'm staying above ground and staying away from open graves. That's my goal each day as I get up. So far, it's
Sounds
working.
good.
Hey, listen, you're going to be giving a webinar tomorrow night on fear. And believe me, I really respect the work that you do on psychology. But AT, the question that I have for you is, what did you think is the greatest obstacle that people have, for making money? Because, they can paper trade all day long and do well, but what is it that you think is the big obstacle that they have to worry about the most?
Funny that you should ask that, because I was thinking about what we should talk about. And we're usually on the same page, and this is no different. I was thinking about a question always people ask me, and that is, what is the most important skill a trader needs to succeed? And over the years, I've answered that differently. This time I'm going to answer it this way. It's where you put your focus. If you have a checklist, and you're on your checklist, you have your setup, and you have the formation of your signals, and you have your signal to take the trade, and then you put your stop in. You have to go down that list and focus on each one of those things before you get into the trade. Now, if your focus is on fear, which is what we're going to be talking about tomorrow night, then what will happen is emotions will take over, and it'll take over your sensibility. Now, focus is a very, very powerful thing. I mean, you could walk down the street and all of a sudden you could be laughing, and it could be a joke that somebody told you before because you're focusing on the joke. All of a sudden you might get some sexy feelings because of where you're putting your focus. But you could, but also, if you have a fear of getting into a trade, your sensibility is taken over, and all you're thinking about is the fear and everything that can go wrong. So when you learn how to focus on each moment of now and make that a skill in your trading, it will make all the difference in the world. I mean, look at Tiger Woods the other day. Mm-hmm. For 5 years, his focus was on his pain. His focus was on all the stuff he did wrong. The focus was on so many different things. But when you saw him at that tee, you saw him with that confidence hitting the one ball in the hole. That's mm-hmm. where all his focus was. And that's why he succeeded after 5 years of being on hiatus, of no focus at all. Mm-hmm. And when I look at the traders that I've worked with over the last 25 years, I found that if those traders could believe in themselves, believe in their strategies, to the point of being able to focus on the one trade and taking that trade when it's appropriate, it will make all the difference in the world in their ability to be successful as a trader. Of course, you have to have a system or methodology that is going to bring you in money. But once you have that, then you have to believe in yourself enough to focus on each step of the way to take that trade.
Mark Douglas used to tell me when I first met him, 40 years ago, he said that, the trading was 85% psychology, and I laughed about it, but towards the end here, I believe it's probably closer to 90% because you see people that just have that ability to focus, and that's really it. I think your analogy with Tiger Woods was certainly great. And I'm not a golf person, but I actually watched it because I saw that he started out the day ahead, and I wanted to see, because he had folded on a few other tournaments, but boy, you could see he was out there to do business, and that's really what it was. He had the confidence. Of course, he had the skill. He's one of the greatest, so who knows? One other question that I have, and AT, how many people have you worked with over the 30-some years that you've been doing this? Because it's been a long time, right? I mean, you must have met people from all over the world.
I have met people from all over the world in various stages of their trading, and there was a point in time I was booked like 6 months in advance, and I would work privately with about 2 to 3 people a month. Now I average about 1 a month. But over the years in seminars and in conferences, I've worked with tens of thousands of people. And certainly now I do mostly webinars rather than go out on the road because I feel I can get to a lot of people without having to take those terrible plane trips to various places in the world. So literally tens of thousands of people. And some of the best traders in the world. I'll give you an example of a trader I worked with a long time ago, and the reason I'm bringing him up is because it was a long process. He had come to me and he said, I know the secret of trading. And I said, what's that? And he says, it's the psychology. I worked with Anthony Robbins, or Tony Robbins, as some people call him. And he says, as a result of that, he says, I took a $2,000 account and brought it up to $10,000. And he says, the main thing that improved was not my technique, it was my psychology. And then he says, I work with Mark Douglas. And I took that $10,000 account and brought it up to $150. He says, now it's down a bit. And he says, now I want to work with you. So we worked together, and this was during the 90s. And he took that I think it was a little less than $150,000, and he brought it up to $3 million. Now, I don't do this with all of my clients, and the 90s were certainly a better time to trade than it is now. But I just want to point out the importance of people working with their psychology. Certainly we saw that with Tiger Woods. I mean, he's worked with coaches, psychological coaches, all during the history of his entire career. And certainly that's true for many of the top athletes, and certainly it's true for people who have been in the Olympics. But it's also true for people who are in the trading world. And, you know, people will say, oh, you know, I'll let that go till later, I'll let that go till later. But the people that will defy that 3-year period of not being able to earn money in the markets, and that's what it averages. It takes you about 3 years to be profitable. The people that will invest in themselves will get to a point of trading and being profitable before that 3-year period, assuming, I guess, again, if they have a system or methodology that works.
Well, that makes good sense, and I hope the folks pay attention to what you have to tell them, because you are the best, and we'll have you on again soon. Thank you for joining us, AT. I love you, baby. You take it easy, okay?
Love you back.
Yeah,
bye,
bye-bye.
Larry. Thank you.
Bye-bye.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I want to just change strategy here a little bit. I want to post a chart of something that we have a really strong interest here at TFNN, and that is these grain markets. I want to bring up the chart of the soybeans. This is a 4-hour chart of November beans. We had that big bottom down there at 812. We were fortunate enough to be buying soybean oil down there, and also some beans and even wheat, and some other things started to move really dramatically. But what I wanted to point out to you here is what's happened over the past week in soybeans. You'll notice that all of these little retracements that we're having are very, very shallow. We've got up to 852 now in the beans. That exceeds the 786, so that has a potential for breaking out. So these grains have a situation that look really, really looking around. You're right, Bob, that corn has started to move. We're very friendly to the corn also. Those of you that get along with the get the 24/7. I'll put this up here so you can take a look at it. We had a tiny bit of a back off in corn, and then it turned around and continued to go higher. What's interesting about the about these grains is what I'm going to cover on the webinar tonight that Adrian is sponsoring. If you have an interest, you go to www.trading on target. I am going to be focused on what I think is one of the biggest bull markets starting right now, and that'll be interesting. And it's starting in the face of the worst news you could possibly get, and that's how they start, folks. That's how they start. I remember 1983, I was on the floor of the exchange, and a fellow came up to me and knew that I had been trading for quite a while, and he said he had to make X number of dollars, and he didn't know what to do, and the timing was perfect. It was Memorial Day weekend, and I told him, I said, I don't know if it's going to work or not, but I think beans are getting ready to explode, and if you bought every 20 cents, buy another contract and put a 20-cent stop on it, and if they run straight up, you'll make your money. And if they don't, the worst that'll happen is you'll make a little bit or break even. And he started doing it, and he ran 10 grand to well over $800,000 in the next 2.5 months just by buying every 20 cents up, because they rallied about $4 a bushel in the midst of the absolute worst news possible. And that I think W.D. Gann said that markets go to a high. No, it was Jesse Livermore. Don't be afraid of high prices. They're there for a reason. Don't be afraid of low prices. They're there for a reason. So that's one of the things that we want to keep an eye on. Now, I wanted to bring to your attention the Hang Seng Index because they were closed because of the autumn festival here, and you'll be able to see that. After we got up to that 28,000 level, we backed off almost 400 points yesterday in the Hang Seng. I believe it's going to hold this level, but we'll have to wait and see if it's going to have legs or not. We don't really know, but we never know. The only thing we can do is to control our risk, and that's the main thing. This business is so much psychological, folks, that it's just really amazing. Because if you can't get that 8-inch cycle right, that cycle between your left ear and your right ear, the rest of the cycles and all the other stuff and the oscillators and the Fibonacci numbers and the astrology, none of that stuff will work if you don't have that 8-inch cycle correct. That's the real key to be looking at. Now let's take a quick look here at the chart for Apple, where we are this morning, just to get a updated view. And you'll notice here, if you're looking at that opening price again, we opened lower, right down where Bob said it was going to at 219. And I think it was Bob that said that in the den. We all got up to 221. We still got a chance to get 223 if the market will rally, but we really need to get above that. Now, if we go back below 219 again, 219 and a half, you're going to be looking at a market that's most probably going to go lower, because it'll be below the opening price, and then the odds on that will be a 70% chance that it's going to close lower on the day as opposed to higher. And that's just a probability. It's not a certainty. We have to remember that as we're looking at some of these things that we're watching. I've been extremely bullish on gold here. I've been waiting to see. I mean, I'm already long, but I would like to see if we could get down to this 1186 level. One time it looked a couple days ago when we got down to 1197 that we might be able to do it. Now we've only rallied up to 1208 or something, so it hasn't really done very much. But should we get that gold down to that level, folks, we have to pay very, very close attention to it, because it's a equal move from what we had between November, which was election night of 2016, into December 2016. That would be an equal drop exactly, and that would be another thing that would tell us that this market is certainly in some type of harmony, and would be watching to see if it's going to make that continued move higher. So we have to, as we approach that level, we want to watch it to see if it's going on. Someone's asked a question about one of the charts that I posted in the newsletter this week, and that is the potential of the double top in the Dow Jones Industrial Average. You can see we had the big ABCD leg, and very unusual that the BC leg was, the CD leg was 2.618 of the BC leg and 1.618 of the AB leg. So, and there is a possibility that could be a double top up there, because it did make a new high at 26,663 and didn't go much higher than that. Now, we didn't get that same thing happening in the Russell. The Russell, certainly didn't make a new high, nor did the NASDAQ. And those two had been the strongest since March of 2009. But that doesn't mean that is etched in stone. But if we look at the divergence that we're having here in these different markets, and it's one of the things that I focused on, you'll see that huge divergence between the NASDAQ and the New York Stock Exchange Index, which has not made new highs, whereas the NASDAQ has made new highs and now has a little bit of a bias to the downside, especially with the action that we had yesterday. Even though that it did come back pretty good, we'll be able to see. Mr. Z's asking a question about whether their full moon cycle bottom came in on the 25th. That's certainly possible, because it's you got a 2-day orb on this, because the actual day for the full moon is yesterday. That was, the start of the autumn equinox, and so we'll keep. Wait, no, that's the 24th. No, the equinox is on the 21st. What am I doing? I'm reading my sheet wrong. Yeah, the full moon was actually yesterday, so you're in that zone for the full moon. So I certainly think that could be the case. See, you're seeing strength now, very unusual strength here in the soybean complex, and that is just, gosh, folks, I have to restrain myself on that one because it looks so bullish. We'll watch it a little bit later. Let's get back to the currency. One of the currencies we've been following very, very closely, which was the British pound. We had a pretty big break in the British pound coming off of that 78% level up at 133. We got down to 130.78. We're trading around 131.40 right now. It's rallied about not quite a point off that bottom, which is not much of a bounce. And you'll notice that the objective that we're possibly looking at here is right at about that 129.90 level. That's what I would be watching to see. But remember, they're in the midst of this Brexit negotiation, so anything can happen. Live every day. Not yet. We got some more to go. Let's hang in there, boys and girls. I'm too excited about these beans. Sorry, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted a chart of the soybean oil, and you'll notice when it was down there at that 27.15 level, that was a 1.618 expansion. Folks, that's the same chart that we're looking at in the Treasury bonds at the 139.08 level. And so pay attention to that. I mean, we should get a pretty good bounce. We're 5 weeks into a really strong down move in bonds, i.e. higher rates. So we're due for at least a 382 rally, which would be a couple of points. So the risk reward on that would be interesting. But the thing that was interesting about the low in the oil came exactly when the Chinese were fighting about the tariffs and all this other stuff, the most negative news possible. And you don't know, I mean, what's going to happen. The only thing you can control is the amount of money that you're going to risk. And that's what it's all about. And that's why these patterns, are helpful, because sometimes they work, sometimes they don't. But I can promise you that they work more than they fail. And the amount of money that you're risking on when they work as when they fail is a big difference. So pay close attention. Great news tomorrow, folks. We're going to have one of our favorite people, or everybody's favorite, but one of our super favorite people will be on tomorrow, and that is Stan Harley of the Harley Stock Market Letter, and he'll be giving us some information, so that'll be really great. So we'll have Stan on tomorrow. I want to leave you with this, and that is that we've had a pretty good run in some of these markets here, especially the Dow Jones over a lot. Wow, look at these beans. Wow, they're really moving today. 857. Mr. Simonley is a happy camper. Boy, we just took out the highs of the 20th, folks, after a 382 retracement. That's a very, very bullish sign, boys and girls. Holy moly, guacamole. Let's take a quick look at this so we can show our sports fans where we stand here. And you'll see that this is where we have the big ABCD there down at the bottom. And there we go. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are,